Good evening, guys. I can see so far only two of y'all has joined. Let's wait for a minute and around 5 minutes and we'll start. Uh, Give me a second, guys. Okay. Good evening to all of you. I hope you guys can hear me. Am I audible, guys? Awesome. Right. So today is the first session of the TRG for taxes for June. So I hope you guys are aware that there was a change in the Finance Act. So earlier, the Finance Act was 2022 that we were using, and now we have shifted to Finance Act 2023. So there are some changes between the two acts. I will give you because some of y'all might be sitting for the second time. So whatever you have learned, some principles has changed by now. So I will give you guys a comparison on the current act and the previous act on the next TRG class. But for today's aim is to have a quick recap on individual income tax calculations. So if you take individual income tax, there were a lot of areas that we were discussing. So today's aim is to focus on all those areas and try to have a quick recap on that. Are we okay? We are good? Great. So I know most of y'all might be aware about this, but we'll start with the paper structure because there would be a set of fellows who are using this live stream one as well. So if you take tax paper, we have three sections. Section A will comply with 15 questions. All of them would be either multiple choices or short answers. Each question will carry 2 marks. These will be very short questions. Then we have section B. Section B will have 3 scenarios. Each scenario will have 5 questions and each question will carry 2 marks. So altogether, we are talking about 30 marks, right? And that will be scenario driven, but all the questions will be again either multiple choices or short answers. Moving on to section C, you will have two parts of section C. One will carry 10 marks. Two more questions will carry 15 marks. So this is how your paper structure will work. So just a bit of an ish idea. So the biggest mistake what we do is we simply disregard section A and B, mainly section A. Usually the marks for multiple choice questions or section A questions are the weakest out of the three sections. So that is my personal observation as well as the observation by your examiner as well. So that is the area where we are losing a bit. So what we can do for that, your study hub is really good. So I have went through certain sections of your study hub, which has been really interesting and had some good questions. So for section A, especially, you can try the study hub practice questions along with your revision kit questions as well. And apart from that, guys, this time take your study hub a bit seriously because even in the last session, we saw there were certain questions in other subjects. For an example, PM. There were instances where they have taken study hub questions for the exam. So far that hasn't happened for taxes, but there is a tendency. It can happen. So let's be prepared for that. Better to have an idea about study hub as well. Then what are the main topics we have? First one, of course, about UK tax system and the tax administration. Income tax and national insurance contribution liabilities. Chargeable gains for individuals, that is capital gains tax. Inheritance tax, corporation tax, and value added tax. These are the main topics. So before I move forward, I just want your views. So what I have planned to do with this TRG is take one particular main area, do a bit of a revision on that, then move on to a model question on that particular area. So that is what I thought of. Any different views that you guys have? I'm totally open. What are your thoughts about that? Ijaz, Rahid, Hamna, what are your thoughts? Is that way works for y'all? Or do you guys have any different suggestions? Great. Then let's go ahead with that method. So we'll do a recap on the theoretical aspects. Then we'll move on to a question on each area. Okay. So today's target is individual income tax. If you take individual taxes, so you guys, most of y'all have studied no now. So it's a revision. So I believe you guys have studied. What are the taxes applicable for individuals? Let's see. Let's try to revamp our knowledge. What are the taxes applicable for individuals? Great. Income tax. Good. What else? Okay, good. National insurance contribution is also there. Capital gains tax is there. Good. There is one more important tax. Pension scheme is not a tax. There is one more very crucial tax. Great. Inheritance tax. Super. So the main taxes that are applicable for individuals would be income tax, national insurance contribution, or we call it NIC, CGT, capital gains tax, and the inheritance tax. Out of these four, our main focus today would be around income tax. So if you take income tax, that is something charged based on the income earned by an individual. So what are the main sources of income that an individual can have? That is the next question that we have to answer. According to what you guys have studied, what are the sources of income that an individual can have? Let's try to make it an interactive session rather than me dictating and going ahead. So what are the main sources of income? Great. Employment is there. Super. What else? Good. Trading income is there. Property income is there. Great. Good. Dividend income also can be there. Yes. Interest income is there. Investment income, savings income. We are missing one more source of income. Yes. Great. Pension income would be the other one. So you guys have mentioned all the sources of income: employment, trading, pension, property, interest, and dividend. Out of these, all these categories we can classify into two main sources. That would be non-savings income and investment income. Under non-savings, we will have four more categories: trading income, employment income, pension income, and property income. Investment income, we have two categories: savings income, that is mainly about interest. Then we have dividends income. So these are the main sources of income. Are we good with this? All right. Next one, slabs and rates applicable for income tax. So for income tax, there would be certain slabs and all coming into the picture, right? So these are the slabs we have: starting rate, nil rate, basic rate, higher rate, and the additional rate. And for each source of income, each main category, that means non-savings income, savings income, and dividend income, we will have different tax rates. Starting rate, is it applicable for non-savings income? Is starting rate applicable for non-savings income? Great. It is not given for non-savings income. Nil rate is also not there for non-savings income. Basic rate is 20%. Higher rate is 40%. And the additional rate is at 45%. These are the rates applicable for non-savings income. Is starting rate applicable for savings income? Yes, these rates has not been changed. Only dividend income nil rate band has changed. Other rates are as it is from the last tax year, from 2022. Right. So starting rate, is it applicable for savings income? Great. It is applicable for savings income. So starting rate will be at 0%. Then nil rate. How does the savings income nil rate band works? Can anyone recall? How does the savings income nil rate band works? Anyone who can recall that? Great. So savings income nil rate band depends on the level of income. So if the taxpayer is a basic rate taxpayer, Then a nil rate of £1,000 will be granted. If the taxpayer is a higher rate taxpayer, £500 will be granted at the nil rate. And if the taxpayer is an additional rate taxpayer, then no nil rate at all. Then the traditional basic rate, higher rate, and the additional rate comes into the picture. Is starting rate applicable for dividend income? Is it applicable? Great. It's not applicable for dividend income. Nil rate. We do have a nil rate for dividend income, but that has been changed from 2022 tax year to 2023 Finance Act. In 2022 Finance Act, dividend income nil rate band goes £2,000. In 2023 Finance Act, that has been reduced to £1,000. So now the dividend income nil rate band is £1,000. Are we good? Great. Then our basic rate, higher rate, and the additional rate is there, but at a reduced rate. So basic rate would be at 8.75%, higher rate would be at 33.75%, and the additional rate would be at 39.35%. Then the format for basic income tax computation. So as I always mention, guys, make sure you present your answer in a nice professional manner. That is crucial. I know there are no direct marks allocated to the presentation, but when you move on to your professional level, around 20 marks are allocated for ethics and presentation. Plus, the impression we create on our examiner has an impact on our result. So try to create a good impression. So have a proper structured answers when you are presenting the answer. That's why I always advise to start with the name of the taxpayer. What are you going to compute? In this case, income tax computation. And for which tax year are you doing the calculation? Start with those. Then we have trading income, employment income, property income, and pension income. Total of this we call as non-savings income. Then we have savings income, building society interest, bank interest. Then we have dividends. For the total of these non-savings, savings, and dividend, what do we call? We have a name for that. Non-savings income plus savings income plus dividends income. What do we call that? These terms are also very important in the exam because we have to answer to the question they are asking. Nope, not the taxable income. I'm asking what do we call the total of non-savings income, savings income, and the dividend income. It's not the taxable income. What do we call that? Correct. We call that as total income. So this is known as the total income. From total income, we can deduct something. So what is that we can deduct? What is the deduction given from the total income? What benefits are you referring to? Not personal allowance. Great. So we are talking about reliefs. From the total income, we can deduct reliefs. So once we deduct reliefs from the total income, what do we call that? Once you deduct the reliefs from the total income, What do we call that? Great. We call that as net income. So what are the reliefs that we have? We have four kinds of reliefs. Number one, if you are an employee of an employee controlled company, and if you borrow any amount to invest in shares of that company, those will be considered, the borrowing cost of that, the interest that you have to pay on that borrowing will be considered as a relief. That is number one. Number two, if you are an employee and borrow any amount to purchase a plant or a machine to be used for your employment purpose, that also we consider as a qualifying interest. The borrowing cost for that borrowing is also deductible. Third one, if you are a partner of a partnership and borrow any amount to purchase plant or machine to be used in the partnership business, the interest on that borrowing is also deductible. Finally, the last one or the fourth one is you borrow something to invest in a partnership. So you want to invest in a partnership. If you borrow anything for that purpose, the borrowing cost of that is also allowed to be deducted. Are we good with what are the reliefs that are applicable for your exam? Sorry. Any concerns on the reliefs? Guys, the types of reliefs, are we okay? Great. Right. From net income, after you derive at the net income, then what you should do? So now you got the net income. Now what should you do? You derived up to net income. Great. You have to deduct the personal allowance. Good. So we are deducting the personal allowance. Then we derive at the taxable income. So we got the total income. That's a cumulative number of all the assessable income sources. From that, we are deducting reliefs. Then we derive at the net income. From that, we are deducting personal allowance. Then we derive at the taxable income. I hope this flow is okay for everyone. Moving on to another important topic, which is called donations. So what are the types of donations that you guys have learned? What are the main types of donations that we have? What are the stuff you have learned? Come on, it's a revision. Let's try to revamp. What are the types of donations that we have? Okay, good. We have charitable donations. Okay. Gift aid donations, right? To be honest, we have around three kinds of donations: gift aid donations, payrolling donations, and trading donations. So for each donation, what we should do is varying. Let's take one by one and see what we need to do. So if it is a gift aid donation, we have three benefits. Number one, 20% upfront grossing up benefit. That means if you donate 8,000, we assume that is the net amount. That is 80% of your total donation. So we gross it up. We divide it by 80 and multiply by 100. So an amount that you actually did not pay also we consider as you paid. So that's a 20% upfront benefit. Then tax band extension from the gross amount. So from the gross gifted donation amount, your tax rate bands will be extended. If your gross donation is 10,000, your basic rate band is not going to be 37,700 anymore. That is going to get extended to 47,700. 37,700 plus 10. And we have the adjusted net income benefit as well. When you are trying to derive at the adjusted net income, you can deduct the gross gifted donations. Then payrolling donations. This is where you specifically instruct your employer to deduct a certain amount from your salary and remit it to a approved donation scheme. So that will be directly deducted from your employment income. We allow it to be directly deducted from the employment income. Then trading donations. This is where if you are running a business, from the business, if you do a charitable donation, then this trading in donation story comes into the picture. This trading donations, you can directly deduct from the trading income subject to few criteria. Number one, it should be purely for the trading purpose. Number two, it should be reasonable based on the size of the business, and it should be a local donation. Finally, should have been made to a registered charity. Sure, just no worries. So are we okay about the types of donations and how to deal with them? Any questions here? All right, great. Then I'm moving on to employment income. Let's just have a small summary about the employment income as well. So when it comes to employment income, there are few things that we need to consider. Number one, there are certain allowable expenses. So these allowable expenses are expenses incurred by the employee, which are allowed to be deducted from the employment income. So it's an expense you paid, which is deductible from the employment income. Then there are employment benefits. That is what you receive from employment, the return you get. That has two kinds: exempt benefits and taxable benefits. So altogether, there are three things we need to understand: allowable expenses, exempted benefits, and taxable benefits. Allowable expenses. So under allowable expenses, number one is payrolling donations. Number two, travel expenses. But that had few criteria that we need to be met. So basically travel between office to home. Do we consider it as a personal travel or an official travel? Travel between office to business place or working place. Is it a official traveling or a personal traveling? Anyone? Guys, for tax purpose, yes, great. For tax purpose, we consider it as a personal traveling. So it is not allowed. But traveling between, travel to client places, travel for business meetings, travel between two different business locations of the same employer, these are deductible, right? Then allowable mileage allowance. So mileage allowance comes into the picture if you have a vehicle and you use your car for office traveling as well. So it's not a car given by the office, your own car you are using for official traveling. Then the mileage allowance comes into the picture. So I'm not going to elaborate a lot on the mileage allowance. I hope you guys can recall that. Then exempted benefits. There's a huge list. we will just walk through, in the surface level on what are the exempted benefits for employment income. Number one, trivial benefits. These are small benefits given by the employer. For that, we have few criteria. Vouchers cannot be taken. We had a maximum amount. So these kind of few criteria were there when it comes to trivial benefits. Then employer's contribution to a registered pension scheme. That is a benefit for you, right? On behalf of you, your employer is contributing to a pension scheme. That's a benefit, but we do not tax that. Then subsidize on-site restaurants and canteen facilities as far as it is commonly given for all the employees. So if your employer provides you with meals free of charge or at a lower cost, technically it's a benefit, but it will be an exempted benefit if that benefit is given for all the employees. If it is only for few selected employees, then of course that is taxable. Then cost of parking facilities on or near the workplace. One mobile phone for private use. Okay, let's assume the employer has given two mobile phones. Then what should we do? So one mobile phone is exempted. If two phones has been given, then what should we do? One should be taxed. Okay, good. So how are we going to tax? So let's say both phones are 20,000 each. So are we going to add 20,000 to the employment income? How does it work? Are we going to just add 20,000 to the employment income if each phone is valuing at 20,000? No, guys, that's not what we are going to do. 20% of that 20,000 will be added to the employment income, right? Not the full market value, 20% of the market value only be added. Are we good? Great. Then traveling assistance other than cars given as far as it is generally available for all the employees. Then parties and gatherings, we had a maximum limit for that as well. As far as it is within the limit, yes, it is allowed, or rather it is exempted. Then workplace nurseries for childcare, that is also exempted. Relocation and removal expenses up to £8,000. That means either you are shifting your work location or either you shifting your employer. For that purpose, to relocate yourself, if your employer provides you any amount or reimburse any expenses relating to that, up to £8,000, that is exempted. Anything going beyond that, we'll have to tax. Then overnight expenses incurred by the employee for employer's business. So that means you go out and you are spending there for your employer's business. Maybe you went in a marketing campaign in a rural area. You might have to stay somewhere, right? So that is what we call as overnight expenses. So the limit is £5 within UK, £10 if it is outside UK. If the actual amount goes beyond that, the full amount is taxable, not the gap. Then loan interest where the interest rate is lower than the market interest rate, but the loan amount is less than or equal to £10,000. So this is where you are in a position to borrow from your employer at a rate lower than the market rate. Then you do have a benefit, right? The market rate is 10%. From your employer, you can borrow at a rate of 4%. You do have a benefit, right? Because simply you can borrow from your employer and put it in an FD, right? Because 4% is your expense, but if you put it in an FD, you will get around 8%. So there is a gap which you can convert as an income even if you want. So there are people I know who did that, especially in banks and all. So even though that is a benefit, if the loan amount is less than £10,000, we just exempt that benefit. Are we okay? Any questions up to now? Guys, are we good or do we have any questions? Great. Then the next one is provision of job-related accommodation. Then recommended medical treatment for employee up to £500. Entertainment provided by third party for good service. So what is this entertainment provided by third party? Maybe a dinner. So you did a great job for your client. So he decides to give a dinner to you. Can happen. Then that's an entertainment provided by a third party for good service, isn't it? Next one, gifts received by third parties for good service, whereas the value of the gift is less than £250. If it is more than that, the full amount is taxable. Then long service awards, if it is 20 or more years, then for an year, £50 per each. Then the next one, provision of transport and accommodation or subsidies where public transport is disrupted. So like what we have in Sri Lanka. Maybe because of a strike or something, it's not you're not able to find the public transport. So your employer might provide that to you. It is a benefit, but we consider that as a exempted benefit. Then employer funded training. So sometimes you might have to go on training funded by your employer. That is an exempted benefit. Medical insurance and medical services where the need for treatment arises while performing duties outside. That means you are working overseas and then you get sick while working. In that case, those are exempted. Welfare counseling, exempted. Pension advice up to £500, given it is available for all employees, exempted. Employee liability insurance schemes, exempted. Eye test and glasses, exempted, whereas it is given for all the employees. Then this is the working from home benefit, which was very popular during the COVID season. So what happens is, if your employer requires you to work from home, there can be sorry, some additional expenses that you might have to incur since you are working from home. On those expenses, for a week, up to £6 is allowed without any evidence. If it goes beyond that, still you can claim, but you will have to provide an evidence. Are we good up to now? Anything that you guys are not clear? Great. Then living accommodation. So guys, listen to this part very carefully, because several instances I have observed, students are committing a mistake under this living accommodation story. So under living accommodation, we have two categories: basic charge and expensive accommodation or additional charge. So basic charge is very straightforward. That would be the hire of rent paid by the employer and the annual value. That is very, very straightforward. Just compare rent paid by the employer against the annual value, take the higher one. Straightforward. The concerns come in expensive accommodation, or we call it as additional charge. Sorry. This is where the problem comes. When it comes to this additional charge, first step is check the original cost plus improvements, whether it is more than £75,000 or less than £75,000. That is test number one. Up to that, you don't need to bother about the number of years. You don't need to bother about the market value. First step is take your cost plus all the capital improvements you have done after that. Check whether that value is more than 75,000 or less than 75,000. Sorry, if it is more than 75,000, you have to check from the time gap between the date of giving the house to the employee for the first time and the date of which you have purchased the house. If the time gap is less than 6 years, nothing to worry, go ahead with cost plus improvements. If the gap is more than 6 years, use the market value plus subsequent capital improvements. That is, if the answer for the first question is yes. If the answer is no, there is no expensive accommodation. There is no additional charge. Only basic charge would be there. So summarizing, basic charge is always there. It would be the higher of rent paid by the employer or the annual value. Expensive accommodation or the additional charge depends on whether your cost plus subsequent capital improvements are less than or more than £75,000. If it is less than £75,000, no expensive accommodation. If it is more than £75,000, you have to cross-check the time gap between the date of providing the house to the employee for the first time and the date on which you purchase the house. If that time gap is less than 6 years, nothing to worry. Take the cost plus improvements. If that is more than 6 years, take the market value and plus the subsequent capital improvements. Are we okay with the providing of living accommodation? Any questions? Especially the expensive accommodation part. Are we okay with that? Ijaz, Rashid, Hamna, are we good? Or we are still not clear on the living accommodation benefit? Yes, now the percentage is 2.25, correct. Any further questions, guys? Okay, then I'm moving on. Motor cars. Okay, so like Rashid said, the official rate, the expensive accommodation rate, it was 2% in tax year 2022. In tax year 2023, that has been changed to 2.25%. So that is another change from Finance Act 2022 to Finance Act 2023. So now already we have discussed two changes. Are we okay? All right. So I believe you guys are okay since there is no sound. Motor cars. If the employer provides a car to the employee, again, the employee has a benefit. Now, don't mix this with the mileage allowance. Mileage allowance was granted only if employee uses his or her own car. Here, it's not the case. Employer provides the car. It's not your own car. It's given by the employer. So taxable car benefit would be the list price into appropriate percentage minus contributions by the employee for the use of car. So again, here there is a bit of a confusion. So what we are deducting at this point would be any contribution made by the employee for the use of car. If the employee contributed any amount towards the capital of the car, that is not considered on this part. Here we are only talking about a monthly rent sort of a thing. So any amount that is paid for the use of car, not towards the capital cost. Then list price means the original price published by the manufacturer, not the cost at which the employer purchased. So not the discounted price, we are talking about the original price. If there are any additional features that is added, the cost of those also need to be added to the list price. And any contribution made by the employee towards the purchase cost of the car, that can be deducted against the list price, but subject to a maximum of £5,000. Okay, are we good up to this point? Any queries? Time to time, I'm raising this question just to make sure that we are on the same page. Are we good? Great. Then what is this appropriate rate? So that depends on petrol car, diesel car, and the CO2 emission, and what do you call, whether it meets the environmental standards. So this is how the table works. If your car is within 51, if your CO2 emission is within 55 grams per kilometer to 54 grams per kilometer, and it's a petrol car or a diesel car which matches the standards, then the rate is 15%. If it is 55 grams per kilometer, the rate is 16%. And if it is a diesel car which does not meet the standard, add 4%. 15% will become 19%. 16% will become 20%. And anything above 55 grams per kilometer CO2 emission, for each 5 grams per kilometer sort of increase, we will increase the appropriate rate by 1%. For an example, if it is 60 kilometers, 60 grams per kilometer is a CO2 emission, and it's a petrol car, then 60 minus 55 is 5. 5 divided 5 means only 1 5 slot is there. So 16%, add 1%, that will become 17%. Are we good? We are clear? Great. However, there is a maximum cap that is 37%. It cannot go beyond 37%. That is the maximum cap. 2% is for zero CO2 emission cars. And for hybrid cars, the rates will be given in the exam. So you don't need to memorize those stuff. Then coming to private use of assets. That means there is an asset that has been given for your private usage. Generally, we take the market value at the time of providing the asset to the employee and take 20% of that as a taxable value. That's the general term. Take the market value when the asset was given to the employee, take 20% of that on an annual basis as the value of private use of assets. However, if the employer is paying a rent for this asset, then the benefit would be the higher of rent paid by the employer or 20% of the market value of the asset. So that's how it works. Then the next scenario is gifting an asset. So if the employer just gift an asset to the employee, that will be taxable at the market value of giving the gift. But the question is, what if the asset was initially given for the private use and subsequently gifted to the employee? Then we have a question, right? Because part of the value is already taxed. Therefore, we take the higher of the market value of the asset at the time of the gift or the remaining value of private usage. That means we take the market value at the time of giving the asset for the private use, multiply by 20% and multiply it by the number of years of private use, deduct that from the market value. So compare these two values. Out of that, higher one would be the value of or the assessable value of the gifting of an asset. We are good or we have any questions? Great. Then I'm moving on to trading income. So I hope employment income basic revision is okay for y'all. Now I'm moving on to the trading income part. So adjustments to accounting profit. So under trading income, we start from the accounting profit and do the adjustments to nullify the income. So first one is expenses that are not deductible for tax purpose, but already deducted in accounting. What should we do for those? Expenses not deductible for tax purpose, but already deducted in accounting. What should we do? So we are trying to match the accounting profit against the tax profits. And there are expenses that are not deductible for tax purpose, but you have already deducted in accounting. Example, depreciation. Great. Hamna believes added back. Ijaz, Rashid, how about you guys? Are you there? Great. So yes, we need to add it back. Then what about the expenses that are not deductible for tax purpose? Sorry, but that are deductible for tax purposes, but not deducted in accounts. So these are deductible for tax purpose, like gratuity expense. In accounting, you don't deduct the gratuity expense, right? You deduct the gratuity provision. But for tax purpose, you can deduct the actual gratuity expense. So for those kind of stuff, what you should do? Deductible for tax purpose, but not deducted in accounting. What should be our treatment? Guys, what is the answer? Great. We should deduct. Awesome. Then income that are taxable but not included in the accounting profit, we need to add back. And income that are included in the accounting profit but are not taxable, we have to deduct them. So we are just trying to convert the accounting profit into the tax adjusted trading profit. Are we good? Okay. The main adjustments. Number one, appropriations to the owner. So any payment to the owner, we are not allowing to be deducted. Any payment to the owner needs to be deducted. So that means it should be added back. We are not allowing to deduct any amount paid to the owner from the business. Then salaries paid to the family members. How about that? What is our provision on salaries paid to the family members? What should we do? Salaries paid to the family members. What should we do? It should be aligned with the other employees. Okay. All right. What if it doesn't align? Great. So salaries paid to the family members, we have to cross check with the market rate. If it is in line with the market rate, no problem. If it is more than the market rate, we can only allow up to the market rate. Whatever beyond that, we cannot allow. So we need to add those back into the accounting profit. Interest payable. So interest payable, we have to split between whether it is relevant for the trade or not. If the borrowing has happened for the purpose of trade, yes, we can allow. If it does not relate to the trade, we are not allowed to deduct that. Are we good? Are we okay? We are good? Great. Then the next one, rental, car rental, and leasing. Gifts to the customers. Legal and professional charges, we had some adjustments. Impairment losses and allowances for trade receivables. Only for trade receivables we allow. Other impairment losses and allowances, we need to add it back. Goods taken for own use, we cannot allow. We have to consider that as a sale. Relief for pre-trading expenses. So that means expenses that you have incurred prior to commencing the trade. Yes, we can allow those to be deducted. Right. So with that, a basic recap on the basic stuff about individual income tax is done. So any questions on the individual income tax? Anything that you guys want to get cleared? Okay, great. Then first of all, let me share the handout with you all. Right. Now let's have a look at on a small question. So I'm sharing the question also in the group. Okay, so this is the question. We have Ben who is working in Mill Limited as accountant, and he's also conducting a small business of his own. We have been given with information about his employment, business, and property income, and we have 5 requirements. Can you guys take around 10 minutes and try part A? Would you guys mind giving a try for part A? Yes, usually doubts come during the questions. I understand and I agree. Can you guys give a try for part A? Calculate the employment income for Ben. Great. So I'll give you guys maximum 10 minutes. Attend the question and share the answer in the chat. So I'm waiting for your answers, guys. Your time starts now. Maximum 10 minutes. Give it a try and share the answer. Okay, Rashid, Hamna, how about you guys? Were you able to give it a try? If so, can I have the answers? Okay. Sure, sure. I'll give you around 2 to 3 more minutes. Rashid, how about you? Getting stuck in accommodation part. Okay, okay. I'll give you around 3 more minutes. Try the question. Okay, shall we start, guys? So, we have Ben, who has been employed with Mill Limited since 2022. He receives an annual salary of £70,000. Mill Limited has granted a house for Ben with furniture for his accommodation from April 23. Okay. This house was acquired by Mill Limited in 2016 for a cost of £60,000, and they have done few renovations prior to handing over the house to Ben, spending an amount of £10,000. The value of the furniture was 7,000. Further, on December 2023, Mill Limited provided him with a petrol car which had a CO2 emission of 53 grams per kilometer. Company has spent 45,000 to purchase this car. Sorry, and they added certain features at an additional cost of £8,000. Ben has also contributed 6,500 to purchase the car, and he also pays a monthly amount of £150. Until they provide Ben with a car, the company has granted mileage allowance of 60 pennies per mile, and there was official mileage of 9,000 miles. Company has also provided Ben with a mobile phone at a cost of £270. Okay. No much adjustments, only few adjustments are there. Similar case in your exam also. You will not get a questions with 15 to 20 adjustments. It will be around 4 to 5 adjustments in one section. Same thing here. We don't have huge amount of adjustments, but whatever we have to carefully tackle, right? So the first benefit we have here is the accommodation, the living accommodation part. So basic charge we can simply take, right? We know the annual value. House is owned by the employer. That means there won't be any rent paid by the employer. So only the annual value would be there. That would be the basic charge. Then coming to the expensive accommodation or the additional charge. So when we are moving on to the additional charge, first thing, cost plus subsequent improvements, whether it is above £75,000. So is it the case here? Is the cost plus subsequent improvements more than 75,000? Okay, Ijaz believes no. Hamna and Rashid, how about you guys? Okay, Rashid also believes no. Hamna? All right. So if it is less than 75,000, do we have the expensive accommodation or the additional charge? Is it applicable? Great, that is not applicable, right? So then only the basic charge would be there. Do you all agree with that? So no expensive accommodation or the additional charge will come into the picture in this particular question. Sorry. Are we good? Great. So only the basic charge would be there. But apart from that, the question says there was a furniture that was given to him. So what about this furniture? What are we going to do for that? Furniture has been given. What should we do for that? Ijaz, Rashid, Hamna, what are your thoughts? Great. 20% of the market value should be considered. Good. So 7,000 into 20% would be the taxable value. It has been given from April 2023. So throughout the tax year, it has been given. Nothing to worry. 7,000 into 20%. Good. Then there is a car. So 45,000 is the purchase cost, and they have added some additional features at 8,000. And Ben has contributed how much? 6,500 for the purchase. 45,000 is the cost, 8,000 is the additional cost, 6,500 is what Ben has paid. So what is the list price of this car? How do we calculate the list price of this car? What should we do to calculate the list price? How are we going to calculate the list price for this one? Uh, 45 minus 8. Okay, I got one answer. Rashid, Hamna, how about you two? Add 8,000 minus 5,000. Okay. 45,000 minus 6.5. Okay. 45 minus 5,000. Okay. Right. All right. So if you can recall what we have discussed today, we discussed list price means the original cost of the manufacturer or the original price given by the manufacturer. We need to add any additional features. If we have added, we have to add the cost of that. And the contributions by the employee towards the capital, we can deduct. But for that, we had a maximum cap. That was 5,000. So if we take, it would be 45,000 plus 8,000 minus 5,000. Are we good with that? Is that clear for everyone? Great. Ijaz, are we okay? Ijaz, are you there? Are we good? Okay. Then the appropriate rate. So what should be the appropriate rate here? Yes, it will be simply 15% because it's only 53 grams per kilometer. So straight away we can use 15%. Oh, right. So then what we need to do? List price into 15%. Then what? List price into 15%. Correct. We have to consider the apportionment because the car was not given throughout the year. The car was given only in December. But is it divided by 12 into 3 or divided by 12 into 4? December, Jan, Feb, March. So it will be 4 months, right? So divided by 12 into 4. Right. After that, what we should do? So we did that also. Then what should be the next step? Great. Next step would be to deduct the contribution made by Ben. So he has done a monthly payment of 150 pounds. So 150 into 4 we need to deduct. Are we okay? With that, the car benefit will be done. Any queries on that? Right. Then they are talking about a mileage allowance also. Until they provide the car, they have given a mileage allowance for Ben. So what do we need to do? Simply, it's only 9,000 miles. It's below the 10,000 miles cap. So 45 pennies is granted per mile if it is less than 10,000. 60 minus 45 into 9,000 would be the benefit that we need to add based on the mileage. Phone, we already know one phone is exempted. So it's only one phone. We can simply disregard that. Are we good with the explanation? Shall we move on to the Excel? Yes, it's for 4 marks. Correct. Okay, then I'm moving on to the Excel. So we have been asked to calculate the employment income. So salary was given. I'm starting with salary. Then living accommodation benefit, I gave a clear working reference. That is also crucial in the exam, guys. Make sure you guys give a proper working reference. So I gave the working reference as working number 1. So I'm moving here. Basic charge we already discussed, only annual value is there. So I'm taking that. Cost I took 60,000, improvements 10,000. Cost of providing the accommodation would be only 70,000, which is below the cap of 75,000. As a result, expensive accommodation would be 0. Furniture value I took, I added both together. You can do those two separately as well. I just added together. So overall living accommodation, including furniture, would be 4,800. I have just linked it to here rather than copy pasting or typing. I have linked it. Are we okay up to this point? Living accommodation, are we good? All right, then I'm moving on to car benefit. Again, as I told you, I'm giving a clear working reference. So this is working number 2. So I'm going to working number 2. Cost is 45,000. I added the additional features of 8,000 and deducted Ben's contribution, that is 5,000. It led me to a list price of 48,000. Appropriate rate 15%. Total benefit would be 7,200. The unused period is 8 months. So I divided by 12 multiplied by 8. Deducted that 4,800. 2,400 is the balance. From that, I deducted whatever the amount paid by Ben, which is 115 to 4. So the taxable car benefit comes to 1,800, which I have mapped here again. Are we okay with that also? Any questions up to now, guys? Okay, then I'm moving on to the mileage allowance. So up until you surpass the limit of 10,000 miles, the official one given by HMRC is 45 pennies per mile. But MIL Limited has given 60 pennies per mile. So we have to take the gap. 60 pennies minus 45 pennies into the number of miles, which is 9,000, which gives me an amount of 1,350 pounds. Mobile phone is exempted, so I had a line and make a 0 value. The taxable employment income would be at 77,950. Are we good? Any questions on this employment income part? Right. Rashid, Hamna, any questions? Great. Hamna, how about you? Are we okay? Great. Then shall we move on to the next part of the question? Shall we try the next part? Great. So the next one is about calculating the trading income for Ben. It carries 3 marks. So can you try to complete this within 6 minutes? Can you guys give a try for part B? Great. So take 6 minutes. Try to finish it within that time. Your time starts now. Uh, Rashid, Ijaz, how about you guys? Hamna confirms she's done. How about you two? Right. Okay, let's start then. Okay, you need more time, Ijaz, or what's your view? Shall we start discussing or you need more time? Okay, great. So, Ben started trading on 6th September 2023 and had a profit before tax of £47,000. When deriving the above profit, a depreciation of 10,000 were found to be deducted. During the year, Ben has purchased a small property to carry out his business at a cost of, I have missed 1 0 there. It should be £230,000, where the cost of the land was 120,000. Ben has used inventory of his business, which had a cost of £5,000 for his personal use. The inventory had a sales price of 6,000 and a replacement cost of 5,500. No entries were in the account with regard for this. Okay, great. So we can start with the profit before tax 47,000. Depreciation, what should we do? For depreciation 10,000. What should we do for the depreciation? Great. We need to add it back. Super. Then during the year, he has purchased a property for 230,000. Out of that, land value was 120,000. So what should we do for this one? What is our treatment here? Yes, it is capital expenditure. Agree. Land is exempted. Exempted from? Okay, right. We don't add the land for trading income. True. And I agree with Hamna also. It's capital expenditure. Okay, great. It doesn't come under the trading expense. Good. So what should we do? No adjustment, is it? Only take building value, nothing. We should take it to property income. Okay. Uh, guys, what is the purpose of this building or this property? Why has he purchased this property? Okay, it is for the trading purpose. Then what should we do? It's a capital asset. I agree. The cost we don't need to add to the trading income. That also I agree. But what happens to the capital allowances or structures and buildings allowance? We had something called structures and buildings allowance, right? SBA? Yes, SBA 3%. Don't we need to give that for this one? Great, we need to give that because the whole purpose is trading. It's a trading asset then. If it is a trading asset, we have to grant the SBA. Are we agreeing on that? Great. Then he has used inventory, which had a cost of 5,000, sales price of 6,000. and a replacement cost was 5,500. Nothing has done in accounts for this particular inventory. So what should we do for this one? For this inventory, what should we do? Okay, I got one answer as at the sales price. Great. We need to add the sales price. Super. So it's a very straightforward question. Let's see how does the answer looks like. Okay, so I started with profit before tax. I took that 47,000. Depreciation, I added SBA. I took the property value 230,000, deducted the land value 120,000, multiplied by 3%, but I time proportion for 7 months. Why? He started the trading only on September. September, right? Yeah. So September, October, November, December, Jan, Feb, March. Only 7 months in trading. So that means we can grant SBA only for 6, 7 months, right? Should have been purchased at the beginning of the trade. So I'm only allowing it up to 7 months. Are we okay with that? The SBA adjustment, everyone, are we okay? Great. Then goods for personal use, I just added it back because no entries has been passed. That means I have to consider this at the sales price. So I added it back. As a result, the taxable trading income came for 61,075 pounds. Are we okay with this trading income part? Any questions? Great. So I hope, did any of y'all figure out the SBA? Did any of y'all did the SBA adjustment? Rashid, Ijaz, okay, Hamna hasn't done. Rashid and Ijaz, how about you guys? Did you guys do? Ijaz also no. Rashid? Right. So that was the tricky one actually in this question. So be careful. These kind of stuff has been there in your exam papers as well. So be careful when you are dealing with certain expenses. Just because it's a capital expenditure, just don't fully disregard. Think whether there are any other aspects related to that. Right. So moving forward. Next requirement is calculate the property income for Ben. Can you guys give a try for that as well? Max within 4 minutes. Can you give a try to calculate the property income? Guys, would you be able to give it a try? The property income? Great. So max 4 minutes, guys, give it a try. Okay, guys, how's the situ? Ijaz, were you able to do it? Okay, let's start. Ben has rented out his house since July 2023 for a monthly rent of 8,000 received in arrears. Rent for the month of March was only collected on 17th April 2024. During the year, he had to replace the existing cooker with a new cooker, which had which had better features at a cost of £13,000. A cooker with the same features could have been purchased at a market price of £7,000. Okay. How many months Ben could have collected the rent? Per month rent is 8,000. So how many months he could have collected the rent? Rent is collected in arrears. That means at the end of each month only the rent will be collected. So July, August, September, October, November, December, Jan, Feb. March was collected at the mid of April, that is after the tax year. So only 8 months we have collected the rent. That is point number one. Point number two is the cooker. So how much can we deduct? So it's a domestic item replacement relief. Can we deduct 13,000 or do we need to deduct 7,000? 6,000. So 6,000 is the gap between 13,000 and 7,000. Am I correct, Hamna? Right. So according to domestic item replacement relief, when you are claiming for that, you have to see whether the item is a one-to-one replacement or are we replacing with the same kind of a asset, which is not the case here. The question clearly says the new one has better features. If that is the case, amount that we can deduct will be limited to the replacement value of a similar cooker. So the market price of a similar cooker is 7,000. So what we can deduct would be limited to 7,000. Are we okay? Great. Let's move on to the Excel then. So simply I took the rent for 8 months like I have showed earlier. 8,000 into 8, 64,000. Then domestic item replacement relief would be at 7,000. I'm claiming that as a result of taxable property income would be only £57,000. Are we good? Any questions on the property income? Okay. Then the next question is calculate the income tax liability for Ben. Can you give a try for that as well? Maximum within 5 minutes. Can you guys try to do it? The income tax liability for Ben. Hamna, Ijaz, would you guys mind giving it a try? Right. So, guys, give a try for this one. Uh, Part A. Shall I share the answer? You want to see the question or the answer, Ijaz? Okay, quickly check on that. Right. Then can you guys give a, let's give a try for income tax liability, max 5 minutes. Yes, after the class, I will share the answer. Question already shared and the handout. I'll share the answer after the class. Right. Okay, guys, 5 minutes max. Try to calculate the income tax liability for Ben. Guys, how's the situ? Are you guys able to compute the income tax for Ben? Okay, go ahead. Go ahead. So 1 minute more, guys. Give it a try. Right. Guys, how's the situ? Ijaz, Hamna, uh, Rashid, were you guys able to calculate the income tax? Okay, one more minute, Ijaz. Right, go ahead, go ahead. 1 more minute. Huh? Right. Hamna, Rashid, how about you guys? Can we discuss? Right. Then I'm moving on. So, employment, trading, and property, all these three assessable incomes we have already computed. I have linked those from the upper parts. So 77,950 for employment income, 61,075 for trading income, 57,000 for property income. Overall, it will be around 196,025, the total income. No personal allowance can be granted, so I'm taking it out. The taxable income would be 196,025 pounds. Basic rate would be 37,700 at 20%. Higher rate, guys, now the limit has changed. Higher rate limit is now 125,140. Higher rate limit has come down from 150,000 to 125,140. Another change from Finance Act 2022 to Finance Act 2023. Then the rest I'm taking under the additional rate. As a result, the total income tax of Ben would go up to 74,414. Are we okay? Any questions? Great. Then I'm moving on. Last part. If Ben makes a gifted donation of £50,000 on 2nd April 2024, what will be the impact on his income tax liability? Can you guys try this within 5 minutes? Can you give a try? What will happen if he has done a gifted donation on 2nd April amounting to 50,000? Can you give a try? Okay, guys, would you want to give it a try or shall we discuss? Right. So 5 minutes, give it a try then. All right, guys, I received one answer. How about the others? What is the situ? Hamna, Rashid, how's the situ? Okay, let's see. So if he make the donation, total income is not going to change. Personal allowance is also not going to change, but the basic rate will be extended, right? Now, basic rate will be extended by the gross donation amount. Donation is 50,000. That's a net one. Divide by 80, multiply by 100, 62,500. That's the gross donation. So your basic rate band will be extended by the gross donation amount. Do we agree on that? Right. What will happen to your higher rate? Your higher rate amount is not going to change. That is going to be this amount itself. Yes, we don't have any personal allowance. That's true. I also took the personal allowance as 0, but still the tax rate bands will get extended, right? So that will create an impact on your overall tax liability, isn't it? From the personal allowance side, yes. Right. Then the higher rate. So higher rate is done. The additional rate. This is your overall in a taxable income minus these two you have already taken. This at 45%. So your income tax liability will be 58,789 compared to the earlier 74,414. You do have a tax savings of 15,625. Are we clear with this one? So simply, like Ijaz said, I agree, no impact on the personal allowance and no impact on the taxable income. True. But the gross donation will have an impact on your tax rate bands. So your tax rate bands will be extended. As a result, you will be having a tax savings of 15,625. Are we clear? Any questions on this one? Yeah, this is the working number one. So no adjusted personal allowance because adjusted net income is above 125,140, like you said. Nijaz, are we good? Higher rate band will get extended, but the thing is, in higher rate band, if your income is going above the higher rate band, it would be the same amount. For an example, now let's extend. So your higher rate band is 125,140, right? Then I'm going to add this one and the gross donation. So this would be the amount. Then this minus this would be 87,440 itself. Rashid, are we okay? Right. Okay. Right. Ijaz had a concern about gross donation. So just 50,000 divide by 80 into 100 because we assume whatever we paid is only 80% of the overall donation. Ijaz, are we okay? Great. So any further questions, guys? All right. Then let's stop at this. Okay. So we assume it's the net. Yes, unless the question specifically states that it is a gross donation, the default assumption is given amount is the net donation. Are we okay, Jas? Great. Any further questions from anyone? All right, then let's stop at this point for the day. I hope it was an effective session for y'all. If any suggestions or changes that you guys require for the way or the materials that I'm using for the session, please feel free to get in touch with me and let me know. I'm always open for the, suggestions coming from your end. So always feel free to get in touch with me on those stuff. If you guys don't have any further queries or suggestions, let's wind up for the day. Definitely, we'll touch that also in another class. All right, guys, then. Thank you very much for your participation. Let's catch up on the next week. Take care then. Good night. You're most welcome.